documents that the bank is supposed or required to accomplish, Mr. Chairman.
That is correct, Your Honor. We should protect our depositors, but I think they should also be more circumspect with the way they give their deposits. In other words, as I said, the normal deposit transaction is normally conducted in a bank premise. In fact, if you're soliciting deposit out of a bank premise, you need the BSP approval to do this. And I think there are certain strict requirements imposed by the BSP to allow certain banks to be able to source deposits outside their bank premises.
I agree with you, but do we have to default the depositor? You know, if the bank agent is so glib and he knows how to persuade.
We suspect, Your Honor, that based on the reports that we have, that the person soliciting most of these out-of-bank premises deposits are not employees of the bank. They are agents of pre-need companies. So, ang problema ko namin is, Your Honor, and I agree with you, this is really to protect the legitimate depositors, but I don't think the fund is to protect fraudulent deposits. What am I saying is that sa amin ng charter, we have to establish that the money actually was deposited in the bank. Now, if the money was sourced outside of bank premises by people who are not employees of the bank, I think the issue will be between the depositor and the agent who solicited the money, because they are not employees of the bank. And we do not know, that's what we're trying to establish, that the money solicited in that manner was in fact deposited in the bank. Now, that deposited in the bank, then maybe we will have a case for validating that. But wala pang dokumento proving that such a situation occurred, then we do not have any legal basis for paying this.
Okay, in fact, I would appreciate, Mr. Chairman, what PDIC is doing as we have established trying to exercise due diligence. But on the other hand, whether seemingly the transaction is abnormal because it is done outside the bank, but done in good faith by the depositor, that is what I'm trying to look into. So may I know from the BSP, Mr. Chairman, what constitutes a legitimate relationship between a depositor and the bank? Well, what constitutes? Because, like, for example, Mr. Chairman, if I'm a graduate of college and I have the diploma, it does not matter how I was able to obtain that, whether it was delivered in my house or it was delivered somewhere. As long as that diploma is genuine, it certifies that I'm a graduate. I think we should not try to begrudge the holder of that diploma how he was able to get it or how it was delivered to him. In the same way, therefore, that if there is that bank account or bank book, I really don't know. That's why we would like to ask BSP to give us a definition on what would be a legitimate relationship between a bank and a depositor. What constitutes?
Thank you, Mr. Chairman. Of course, I would like to start by saying that whether it is an eligible deposit for payment by PDIC, that's the cause of PDIC. Because the law detracts ng responsibility that function. So, this will just be my personal comments and without prejudice to the final decision on whether certain deposits will be paid or not. As mentioned by PDIC President Golez, we have strict requirements on bank transactions. Banks are supposed to conduct their transactions within office premises. And if certain bank personnel will solicit deposits outside bank premises, they have to secure special approval from BSP. And BSP has to be sure that they are also safeguards. And these are normally allowed where the solicitation is on the market stalls because the market stall holders do not have time to go to the bank on a daily basis. Now what happens if, despite these regulations, there are some solicitations outside bank premises? I can refer to a case where decided by the DOJ then, where the Secretary of Justice was Senator Enrique. There was a time when he was the Secretary of Justice. And there was a depositor who transacted with the bank over the counter, delivered his money, and he was issued a certificate of time deposit. But the money did not enter the records of the bank. So insofar as the records of the bank are concerned, the money didn't enter because the money was pocketed by officers of the bank. But the certificate of deposit was issued, it was signed by an officer of the bank, and so the opinion of Secretary of Justice and then was that the deposit should be paid. Because the moment the money is turned over the counter, the depositor has no control as to what will happen with his money. Whether it will enter the vault, whether it will be pocketed by a bank officer, he does not have any control, and the depositor should not be made to suffer. As long as he dealt with a legitimate bank officer and the document was signed by a bank officer, that should be honored. Now, that is a transaction that occurred within bank premises. What if the transaction occurred outside bank premises? And it happens that there are clients who are where brand managers are active in saying, okay, I'll do door-to-door service, you do not have to go to the bank anymore. Every month, I will come to your bank and give a renewal of the certificate of time deposit. There are actual cases on this, Your Honor. And there was a time when the depositor, it's not a closed bank, so it's not an PDIC issue. So there was a time when the depositor had to come to the bank ahead of the maturity because she needed money. So she had to terminate. And when she went to the bank, she was informed that the money has been withdrawn by the branch manager who absconded. So she lost her deposit. My personal view is that the bank is still liable because under the principle of what we call promissory estoppel, because the bank, apparent authority, under the principle of apparent authority, there's a legal principle of apparent authority, because the depositor dealt with an officer in the knowledge that he or she was an officer of the bank. If he did not know that he was an officer,